On this video, I'm going to talk about debits and credits as it relates to the Florida Real Estate State Exam. I'm Karen Climer, owner and instructor at Dimitri School of Real Estate in Orlando, Florida. I've had hundreds of students pass the state exam and go on to have successful real estate careers. Keep watching and I'll explain debits and credits as it pertains to the Florida Real Estate Exam. The closing disclosure is a document that explains where the money is going on the day of closing. It's basically the contract in math terms. Everything on the closing disclosure is about cash today. A debit is when cash is going away from you. I think of it as a frowny face. Debits bring you down. A credit is when cash is coming towards you, a happy face. But remember, it's only about cash today. So if cash is coming towards you today, it's a credit. If it's going away from you today, it's a debit. Let's go through a few examples. The purchase price. Today, the day of closing, the buyer is giving $100,000 to the seller. The buyer is losing money, so he's frowning, a debit. The seller is receiving money, so he's smiling, a credit. So the purchase price is a debit to the buyer, credit to the seller. In fact, it's the ultimate debit to the buyer, credit to the seller. What about the binder deposit or the earnest money deposit or the good faith deposit? Those words are all the same thing. It's the initial deposit that the buyer gave the broker when he made an offer. It's sitting in the broker's escrow account or maybe a title company or attorney escrow account. Today, the day of closing, this is $5,000 that the buyer does not have to come up with. Someone else is bringing it to the table for him. That makes the buyer happy, so it's a credit to the buyer. He's happy because it's $5,000 that he does not have to bring today. Someone else is taking care of it. Now you might be thinking, but it's his money, he paid it. But remember, this is all about cash today. He paid that money weeks ago, so today it's a good thing. The deposit has no effect on the seller. Even though he's getting the money, it's just part of the purchase price. So the binder deposit is a credit to the buyer, nothing to the seller. What about a mortgage from the bank? Let's say the buyer's getting a $70,000 mortgage from the First National Bank. So let's think this through. Today, the day of closing, First National Bank is bringing $70,000 to the table on your behalf. Would that make you happy or sad? That would make me happy. It's a credit to the buyer. It has no effect on the seller because he's getting the money no matter what. It's just like the binder deposit in that as far as the seller's concerned, it's just included in the purchase price. The seller doesn't care if the money is coming from you personally or from the bank, so it has no effect on him. Also, don't focus on tomorrow. Tomorrow, the buyer will be sad because he has a nice big debt. But we don't care about the past or the future, only today. And today, the day of closing, the buyer is happy. So a mortgage from the bank is a credit to the buyer, no effect on the seller. What about prorations? There are 3 types of prorations on the Florida State Exam: rent, property tax, and interest on an assumed mortgage. In real life, there are a lot of other things that can be prorated, but for state exam purposes, those are the only 3. The first thing about prorations are always, always, always double entries. That means it's always on both sides, and it has to be the same dollar amount on both sides. In other words, if it's a $500 debit to the seller, it's also a $500 credit to the buyer. If I hand you $500, it is impossible for you to receive anything other than $500. That's why it's the same on both sides. So if there's an answer choice that says $100 debit to the seller, $200 credit to the buyer, you know that one's wrong. You don't even have to read the question to know that that's wrong. As I mentioned, there's 3 types of prorations we need to know. I have other videos where I work out the math problems, but I'll briefly go over just the debit credit aspect of each one on this video. So let's start with rent. On the first of the month, the seller collected, say, $1,000 rent. Midway through the month, when we're at closing, the seller is going to give a portion of that money to the buyer. If the seller is giving money to the buyer, it's a debit to the seller, credit to the buyer. What about property tax? Property tax is paid in arrears. That means you get to enjoy all the cities of the city and county, then at the end of the year, in November, you get the bill. So if we're closing before November, let's say June or July, then the seller's going to give the buyer the seller's share of the property tax. That way when the bill comes in November, the buyer has the money and can pay it. If the seller's giving money to the buyer, the seller is frowning, the buyer is smiling. So it's a debit to the seller, credit to the buyer. The last type of proration is interest on an assumed mortgage. Interest is paid in arrears. So when you make your February mortgage payment, you're paying the principal for February and the interest for January. So if we're closing in January, that means that the buyer is going to make a mortgage payment on February 1st, and it will include interest for the full month of January. But he only lived there for a portion of January. So today, the day of closing, the seller is going to pay the buyer for the seller's portion of interest. Once again, the seller is giving money to the buyer, so it's a debit to the seller, credit to the buyer. For the three types of proration we have to do, you can almost bet that it's going to be debit to the seller, credit to the buyer. There are a few funky situations where it would be the opposite, like if rent was not paid on the first of the month, or if we're closing after the November tax bill. But in your everyday regular situation, which is most likely what you're going to be seeing on the state exam, proration will be a debit to the seller, credit to the buyer. But not everything is a proration. We also have to talk about expenses. Expenses are always, always, always debits. I don't know anyone who's happy about expenses. They're always on the frowny side or the debit side. The only question is who's frowning. Is the buyer frowning or the seller frowning? In real life, it depends on what the contract says. Anyone can pay any expense. It's just a matter of what you negotiate. However, there are some things that are pretty standard. For example, the seller almost 100% of the time pays the doc stamps on the deed. So those are a debit to the seller. But it's nothing to the buyer. He isn't paying it to the buyer. It's not a proration. He's paying it to the state of Florida. So you could say it's a debit to the seller, credit to the state of Florida, but the state of Florida is not on the closing disclosure. Only the buyer and the seller count there. So doc stamps on the deed are debit to the seller, nothing to the buyer. If you aren't sure what doc stamps are, check out my video on that because you need to know it for the state exam. Intangible tax is another expense. This is a tax paid on the mortgage. It's the buyer's mortgage, so this is his expense. Intangible tax is a debit to the buyer, nothing to the seller. Other expenses are things like the survey, the termite inspection, the broker's commission, anything like that. They would be debit to whomever agreed to pay it. I hope this helps in clarifying debits and credits because I know it can be confusing when you first learn it. If it helped you, please like the video, leave a comment, and subscribe to my channel. That helps other people find the video. If you have any other questions about the Florida Real Estate State Exam, if you're looking for a real estate class, or you're looking to get started in a real estate career, please give me a call. I'm Karen Climer at Debits School of Real Estate in Orlando, Florida.